Liquidity. Liquidity is so important in trading. You need liquidity to trade. Without liquidity, you're more than likely going to be always on the wrong side of the trade. This is not about trend or direction of the market. If you use liquidity properly, it almost doesn't matter what the bias is. And when you pair it with the bias and good confluences, you'll be always in so early in the market that it'll be much safer than entering everything. So, how is liquidity formed and what is liquidity? The best way to kind of find liquidity is that when you find a break of structure or a market structure shift, whatever low was formed before that is a low. It's a low. So you can't have a you can't what you see on screen. You can't have a a low unless you break a high, right? Because if the market is now, I need to delete this one. Um, if the market is in this kind of moment right here and it's going up, there's no break. So this is not valid liquidity because we haven't broken above this high. So this is not a low. This is just a retracement which hasn't completed its cycle to become a liquidity point. Once, can I delete fast? How do I delete fast actually? Alt, nope. Oh, yo. Okay. Um, basically, when you again, come on, when you have your break of structure or market structure shift, whatever last low was formed, you want the price to go under it, collect some orders, some energy before pushing higher. The same when you go to the downside. You have here your high. Here, this is not a high. Now it's a high once we've broken. So what we want the market is to sweep it and then go lower. Because the market, the false truth about the market is that it moves just up, down, up, down, up, down. If it did that, everybody would win. But the market in reality moves more like it makes it's a bit too big. It makes a high, then it makes a low high, then it plays around in here, then it can break again, then it goes down, sweeps this low, then it goes up to here, plays, breaks, then maybe goes all the way down, then goes and then continues the way up. That's the market as you can see on the screen right now, and it's not super clean. So let's quickly spot some liquidity being taken. Oops, I'm still in the drawing. Right here, we have our low, high, low, right? The downtrend, a downtrend started. So this is a 4 hour. So after every, this is down, up, down. This is a break of structure in here, or even a market structure shift because it's the first breakdown after this high was formed. Then we have another break in here of this low. So after we break our low, we find the high. Okay, so this went down, it went up. Okay, that's my high. Then it went down and broke structure. So this is my liquidity point. Then next one, down, up, down, up. You can even have like a mini break in there. Where's the high that broke this low? That's, you say, okay, went down, went up. Oh, okay, you've got two lows, two highs here. Meaning price is more than likely when it's here gonna go for your equal highs, you can say, which it did right here. It swept it, caused a little sell off, went a bit higher, swept the whole high, and now had a big sell off. Okay, now let's see another liquidity point. We have, okay, on the 4 hour here, actually, EU is very bullish in that moment, so it didn't take really a lot of liquidity. But here, well, this is a bad example because you don't even maybe know what a gap is, or if you do, it's difficult to trade it. But here you have, again, you have a break below the low here. That means obviously the high that was created, which would be this high. Also, yeah, if it's internal, maybe this high, but it would be this high. It got swept. It touched the POY in here, and then it sold off. You could have caught. decent amount of trade on the 1 minute. If you're trading 15 minute, maybe you're not going to catch it. You have to be a little bit more accurate with your time. Here also we have really good structure. We have our high, we break below the low, making this high a liquidity point. Also this, okay, that just glitched. Also this, so the market sweeps the high. It shows some indication in there. Whatever, when you go on the lower time frame, then it retests the liquidity and sells off a lot. So that's liquidity. Also, you have to react to what the market shows you, not guess, because you have, just like everything else, you have many liquidity points. If you enter straight away after a liquidity point, you will probably lose. You have to wait for confirmation. One really good confirmation is when you start seeing wicks. The problem with the 4 hour liquidity is that it takes too long to wait for a 4 hour wick. If you start seeing maybe a 15 minute, a 5 minute wick, even on the 1 minute you're seeing really good indication of a sell, good structure being formed. You could catch a short-term sell on the 1 minute, and then on the higher time frame show you, yes, it was a liquidity sweep. You can catch the bigger and longer move. Um, Also, let's see if we can see another quick liquidity sweep here. Also, you could see um, we have liquidity sweep wicked. We did close a little bit over it, but then it closed and then just started selling off. So that's liquidity. You need to find liquidity when we go on the 5 minute. If I'm looking, let's say for today to enter, it works the same way. How I mark out liquidity is I straight away see, okay, we have a major low, like a major low here, which broke this, which I don't want to go so far, but it's easy to see. You've got this major low which got broken, making this a guaranteed liquidity, a really good high. Also, I could see that this little liquidity point could have made a sell off. It made a wick, so it wasn't enough, it went higher. You had a POY in here. You also have this 5 minutes as liquidity, which you reacted off because you could see you have price went up, then the black wicks means it went down. It went up to this wick here, and then it went down, making this our break of structure. So that is also liquidity point. So when you draw that out, you could see that the price reacted to it, and then you target the next liquidity point, which you have here a break, make meaning what? When you have a break up, it means the low created was a liquidity point. Now you flip it back to the most recent one. We went down, we swept all these lows for liquidity, we're pushing up, and now we've had this liquidity swept. We have this liquidity swept, it's also high, but we've swept two liquidity points. We've not hit this yet, which we could go to hit or we could sell off. Then let's say we open, this is on the 5 minute liquidity. If you open the 15, you will also see that it's a 15 because look, you have the price made a high and then it broke below the last low. So that is a 15-minute high and a pretty good one. Internally, what we have here now, what we see is, you could say, internal liquidity also strong enough. We have, it went up, went down, and it did a market structure shift in here, slash break of structure, whatever you consider it, but it's a market structure shift because the trend is down. This shifted up. So then you would have this low here as your liquidity as we broke higher on this high. Then we go down, up, and make a new market structure shift again into our direction. Making what? Making this high liquidity. But as we can see, now we've also got a 15-minute POY. And when we go down to our 5 minute, this is why it's important to have the higher time frame. I said, look, we haven't tapped our 5 minute, but we swept liquidity, a 5 minute liquidity point, but we're reacting of a 15-minute POY. So what could that mean? That could mean that the price will sell off from the 15. We open the 1 minute, and what am I seeing here? A good reaction. We've got a nice break here, and then I've got this as the POY slash, if this one works, since it's the last candle, it could be causing the reaction. You could catch a sell in here, looking like something like Well, to be honest, I don't really like this entry. It hasn't shown me enough. I don't really like the entry too much, but you'd have to play it safe. Above here, guaranteed. If you're gonna enter now, you'd have to be above there. But I don't like this entry and go for a 3-2-1. You'd open the 15. Okay, here you go. Here's a liquidity point. You'd mark this out, target the liquidity point and a bit lower. But as you can see, the OR is not the best. So you have to find a better entry. Also, to refine it, you could also wait for liquidity sweep on the 1 minute before entering. So you could wait for the 1 minute being swept here, the last high, or the price now goes lower, right? Breaks this low, and then you go up, sweep the last high here, and then you go down, and then when the price comes back up to re-enter into the POY, you sell off and continue down. That also could work. But as you can see now, the price is either going to be a little bit bullish still, or it's going to come to react after this. But you could see there wasn't many entries, and unless you get a liquidity point being swept, you shouldn't be entering because you're going to be just on the losing side too much. I did say if you have the right liquidity point, you don't need trend so much. As you can see here, we broke this high, making this low a liquidity point. You can see the price swept it and it jumped up a good amount. If you're on the 1 minute, if I open here, I think there was actually no entry today, but you could have got an entry. Um, if you trade fair value gaps, you would have had an entry here. If you enter off of fair value gaps, you have an entry here. I don't really like it. It didn't hit the 5 minute POY here, but it did hit a 5 minute liquid fair value gap. And then when you go here, here also it never came back down, so it was a bit too aggressive for me. If you entered early after the second break or something like that, or if you were to mark out this POY and you were like, okay, I'm happy with this, your trade would have been this. You would have entered the buy under the top of the POY, and then you're hitting a 1 to 4 or. Did it go higher? No. So you could have been hitting a 1 to 4 or targeting. I think that's the 5 minute liquidity. Yeah, targeting 5 minute liquidity. So there you go. You could have went against the trend, but won a 1 to 4 or. That's liquidity for you. Liquidity is important. With liquidity, you have a chance of winning more if you're even against the trend or wrong in your bias because after the liquidity got swept, it basically needs to go for an opposing liquidity before it goes lower or higher because it needs to balance out the movement. So that's liquidity. This is going on YouTube and potentially on TikTok, but it's a bit longer video. I do have a free Discord. Comment or DM me if this is on TikTok about the link, and I will send you. You can join. It's free. I've got a lot of traders in there. People keep joining. I also have a full mentorship. If you want to learn, yeah, DM me, ask what's in the mentorship and all this, and I'll see you in the next video. Get to learn liquidity and start printing, and then that's it. Thank me later. Just thank me later, okay? Or you can thank me now because this is gonna change your trading. So I'll see you in the next video.